everything was settled actually for a recession in the US this year. But overall, we have a soft landing scenario for 2024. As far as the Eurozone is concerned, clearly growth is a little bit more timid. We have a forecast of 0.6% for next year. As far as China is concerned, there is a clear willingness by the authority to rebalance the economy. On the one side, to be less dependent on exports, less dependent also on the real estate sector. Good news on the inflation front is that we have seen a significant decline. We were above 10% in Europe, so the good news is that inflation has been divided by 3 in the US. It has been divided by 4 in Europe.
Now we are seeing strong disinflation that is driven by the supply chain normalization, and that is very good, and as we see it in both the market and the inflation figures. But we still have some kind of stickiness in inflation, and that is mostly driven by demand factors. The disinflation will continue, but likely it will stay above central bank targets.
I see 2 main factors that will affect inflation. The first one is the energy transition. Another big factor is AI, it's artificial intelligence.
On the ESG front, the energy transition, of course, continues to remain an important theme. We estimate today that the world needs about 75 trillion of investment to make it to the net zero world by 2070.
In the longer run, given the fact that we expect inflation to go down and the fact that we expect also like still strong support for those companies, I think we will see over the next few years, I would say 3-4 years, a good performance.
Inaction is not an option.
Obviously, we can't forget AI, which will drive this new cycle of innovation. Some mega trends that are opening up a new cycle of opportunities for equities.
An amazing figure to share is that there has been 520 rate hikes in the world over the past 24 months. Enough is enough. This is the end of the rate hike cycle. With the fall of inflation, central banks will have the possibility to start normalizing their interest rate policy.
Central banks, they don't want that, and they will likely lower their rates to reflect that disinflation process. We don't think that a full rate cycle is ahead of us. We expect some adjustment.
40% of the world population will have an election next year. That's 80% of the equity market capitalization. Central banks, how they will eventually deliver the rate cuts. Promising rate cuts is one thing, delivering what the market expects is another one.
The portfolio construction is going to be key, and that's why we like using a strategic allocation for long term. We are more optimistic for balanced portfolio that we have been before because of the new regime that we are talking about today and the opportunities of diversification that we can get from now.
Bonds are back, but this time is for real. There's a decent amount of yield to lock in and to pick up and to focus on high quality credit.
In this scenario of easing rate, sensitive assets with long duration, such as growth stocks, should be favored. On one side, we get a valuation re-rating by discounting future cash flow at lower rates. And on the other side, CapEx investment will benefit from this easing of financial conditions.
We believe in diversification and we want to expand the opportunities across asset classes and also within asset classes. Today we are overweight on US equities and emerging markets, and from now maybe we are more cautious on European equities.
We remain positive on tech leaders in Taiwan and South Korea, essential to the global AI supply chain.
A last word on private markets, because at Indosuez we have a very, very strong franchise. We believe that even though 23 was a bit of a slow and we had a slowdown and we had an adjustment. We are entering into a new cycle where clearly there will be more differentiation that will be made, particularly with managers that will be able to generate value, this time not from a financial perspective, but much more from having a much higher level of improvement into operations of companies. So we are still, quite positive for private markets.
But in any revolution, we will be winners and losers, and we are here as experts to detect the future leaders of tomorrow.